Hello everyone, this is Rakesh Kapilis and I welcome you all in my class. And today we will do the plus one accountancy journal and we will move further with the next topic, that is trade discount and cash discount. Trade discount, in order to understand trade discount or cash discount, first of all let me tell you what is discount. Discount may be defined as a reduction or exemption or maybe a relaxation in the price of a product which is being given, which may be given by the seller to buyer. It is a simple, in simple word, it is a concession given by the seller to buyer. Trade discount is that discount which is given by the seller to buyer just in order to increase the sale. Means this type of discount will be allowed only if the buyer is ready to buy a good quantity of the product. If he is going to purchase the goods in a bulk, then in order to increase the sale, he may leave some part of the cost to buyer, and that is called trade discount. And let me tell you, trade discount is not recorded at all in the books. Why? Because when invoice will be made, then while making the invoice, the amount which is being exempted by the seller, that will not be recorded. Like if suppose goods costing 1 lakh rupees is being sold to someone at the rate of 10% discount, then 10% of 1 lakh will become 10,000 and the net entry with 90,000 will be made, not with 1 lakh. 10,000 will not be shown anywhere. For that, entry in the books of seller will be cash account debited to sale 90,000, and in the books of buyer, purchase account debited to cash with 90,000. That is trade discount. Second is cash discount. Cash discount is allowed by the person who have to receive the money from someone, and cash discount is only allowed in that case when the person who is going to pay is ready to pay the amount before that decided date. Suppose someone has to pay the amount 3 months later. If someone has to pay the amount, suppose 10,000 rupees after 3 months, but if he is willing to pay, if he is ready to pay this amount right now, then the receiver may give some concession to that person, and that is called cash discount. And cash discount, the main purpose of cash discount is to get the amount from someone before that decided date, and this will be recorded in the books. And as we know that who is receiving, for that it will be called discount as a loss, and he will debit that, and the person who will pay this, for that it is a gain and he will credit that. So the person whosoever is receiving this amount, he will make the entry cash account debit, discount account debit to name of that person, suppose XYZ. He have to get 10,000 and he is paying suppose 9,500. Then the entry will be 9,500 debit, discount debit 500, and to the person from whom you have to get, that is 10,000. This is cash discount. The major difference between these two type of discount is that trade discount is not recorded in the books, cash discount is recorded. The purpose of trade discount is to increase the sale. The purpose of cash discount is to get the money from someone before that decided date, early, right? Now this is all about trade discount and cash discount. Now we will move further for the interest on capital, our next topic. Interest on capital. If someone is investing the money in the business, then there may be two purposes for that. Number one, profit, and number two, interest. Profit is a rare phenomena. Profit may or may not occur, may or not happen in the business. It is totally dependent upon the future that a firm will get a profit or loss. But if the money has been invested in the business, then it becomes the responsibility of the business that the business person should be given the interest on capital. So for that interest on capital, entry will be interest on capital account debit to capital. And let me tell you one more thing. The thing upon which interest is being charged, that thing will increase. If the interest will be charged on capital, capital will increase. If the interest will be charged on loan, loan will increase. If the interest on drawing will charge, interest will increase. Right? This is interest on capital. And why we have debited the interest on capital? Because interest on capital is an expense for the firm, and according to rule of nominal account, it is being debited. And because of this, capital will increase, so it will be credited. Come to the interest on loan, same treatment. Same treatment. If we have taken the loan from any of the bank or from any of the individual and we have to pay the interest on that, then the entry interest on loan account debit to loan. Loan will increase and interest on loan is a expense. The last in that category, that is interest on drawing. But drawing, interest on drawing will be an income for the business, because the person who is using the money for his own purpose, he will give that money along with interest. So for that, interest will be treated as a income, and according to rule of nominal account, interest on drawing will be credited, and the entry for that will be drawings account debit to interest on drawings. Now let me tell you one similar thing in that case, that is whenever you will charge the interest on anything, that will increase. Here you are charging the interest on capital, capital will rise, here loan will rise, and here drawing will increase, right? But interest on drawing is an income, so that's why it is being credited. Interest on loan and interest on capital is expense for the firm, so that's why it will be debited. So this is all about trade discount, cash discount, interest on capital, interest on loan, and interest on drawing. And in our next video we will try to understand some more journal entry. Thank you very much.